What's up, guys? Welcome to Finance Corner. This is CK Mateti, and this is Finance Corner. We'll be taking you through personal financial management and basically on where to start is the budgeting, the planning of how you're spending your money, how you're making the most out of it, the most savings out of the income you're getting. Now, just to ask you a question, how much money do you have now in your M-Pesa, in your savings account, in your current account? If you're not aware, then you might need to question your financial planning because you need to understand and know how much you're making every month, every year, every quarter. At any point in time, you may need to understand how much you are spending and how much you're saving. Well, whenever you earn your money, whether you're in formal employment or you're in business or you're in farming or you're in rental business, you're collecting rent every month, you need to understand that there has to be a way of how you plan to spend that particular money. Well, budgeting is planning to spend, and now you're planning your finances on how you're going to spend every month. Well, then how do you know how to apportion or allocate every coin to the specific expense every month, every quarter, or even yearly? This now will reflect on the financial goals that you need to make every year. When we start a year, we start with a lot of ambitions and a lot of goals and a lot of psych to plan. Say, by the end of next year, I should have bought this, I should have done this, I should have done this. But this revolves around on how much you're making, because you can only save more if you're earning more. That is not true. You could be having so many financial or income flows, but when you look at your savings, they are not reflecting on how much you're making, because you're going a little bit lower than what is expected in terms of expenses. Now, expenses are categorized into two. One is the needs, and the second one are the wants. The needs are the basic spending on things that you cannot live without. For instance, you cannot live without food. You have to eat for you to make money. You need things like power, the utilities to sustain your life. You need somewhere to sleep. You need good health for you to be energetic, to be healthy and productive in what you do every day. Well, when it comes to wants, these are things that they can wait, or you can survive without them for some time or totally without them. For instance, if we categorize something like going out every month and enjoy, yes, it's very key and for your social life and for your growth, for your networking, but you can live without that. And it can wait, can postpone a meeting, can postpone a catch up, but you cannot postpone paying the fixed costs. For this case is the rent. Therefore, you need to understand where your money spending priorities come. And the first thing I will emphasize on is how to apportion every coin to sustain those specific needs before the wants. Priorities first. Well, the first aspect is knowing how much you need to spend on particular expense. For this case, I will go with the rule 50, 30, 20, that 50% of your income, I'm talking about the disposable income, the money that you're making that is within your control. Assuming you're in formal employment and you're making maybe 100,000, that may not be the amount of money that is coming to your account or to your paycheck. So we are referring to the 50% of the net amount, the money that is within your control or within your convenience. If it's 50%, then where does that 50% go? That 50% should be going to the basic needs, meaning that the basic needs include things to do with food, shelter. In shelter, I include the utilities because they are sustaining your staying in that particular apartment, that particular house. So the total amount of money that should be going to those specific items: food, shelter, health, and also clothing. You need to keep yourself warm. You need to look good when you're going out. You need to be comfortable. It should be 50%. This is just a theoretic way of at least planning for your finances. Now, the 30% goes to the wants. These wants are things that you want. For instance, things like entertainment. You need to go out. You need to enjoy time with your friends over the weekend, have some few drinks here and there. You also need to plan for that. And this planning is what we call in budgeting, basically. Now, other aspects are things to do with subscriptions. Maybe you like movies, you need to have subscription to those particular platforms. You need to plan also on those aspects. But remember, you can live without them, the better. Now, what about the remaining 20%? The 20% is advisable that you focus them in savings. But I will be a bit reserved on savings, because don't just put your money seated somewhere, being utilized by financial institutions without bringing you additional income. Because remember, I mentioned that it is very advisable to make more money, that you have more financial or income streams coming your way into your bank account, to your M-Pesa. Therefore, make your money also bring more money through investing. These are platforms that we'll discuss here in detail. For instance, you could have an account with the circles that money will bring, that dividends bit at the end of the year. Then the nets, there are so many currently, they will bring more interest monthly. Some of them are even accruing interest, compounding interest every day. And therefore, focus on that. We will also look at how then you need to know how much you're making. And this now again brings the topic of financial goals. By the end of the year, if you have a fixed stream of income, inflows, what is coming from employment, from farming, from business you're running, it's a hardware, it's a car rental, maybe you rent your car out. These are goals that you need to set. For instance, by the end of the year, you say, I need at least $500,000. It's possible, very much possible. Assume you're earning like maybe 100,000 net, or even 50, and you apply this 50, 30, 20. Does it limit your living comfortably, for instance? Because most of the time we tend to please our peers, our friends, our neighbors, our family that live in good life. Yes, good life is very key, it's enjoyable. But if you forgo those kind of luxuries now, you might enjoy them permanently later in the years. Well, that brings the aspect of planning even according to where you are now. For instance, as a student, what do I need to do? As a young employee of a company, maybe I'm young in my career, where do I need to take my career to? Maybe I'm young in business. Maybe I'm about to retire in 2 years. I don't need to be a liability to my people when that time comes. Therefore, that's when now you start to plan and to set this goal. Under the 50, 30, 20, the 20%, if you have to apply, the 20% of, for example, 50,000, 20% of that is 10K. Therefore, you're saving 10,000 every particular month. Then, at the end of the year, you will be saved for the rainy days. And remember, the rainy days will always be there. So if you have the 10%, you need to direct it to those particular saving platforms that we'll touch in a separate video for you to get detailed information. Well, 10,000, assuming you are getting 50K, and 20% of our rule here is 20% of 50 is 10K. So that is 120,000 in a year. Do you know in 5 years, that is at least 120 times 5, that is 600,000. You will have sorted so many things in terms of your financial security. For instance, things to do with emergency fund. things to do with contingencies, things you not plan for. And this 120K reflecting to 600,000 in 5 years will now start generating income. Assuming it's a money market fund, 600,000 will be giving you, I think at least in every month will have around 5,000, assuming it's 12, 14%, 5,000 Kenya shillings. So your status has changed even from 50, assuming it's 50K still fixed, it will have changed to 50 to 55. Therefore, you will not live the way you used to live. But assuming you said this 5K will not be coming, therefore your situation is worse than 5 years ago. Therefore, we emphasize on budgeting, and I always advise that the time to budget is not tomorrow, it's today. With what you have, with the little that you're making, have a plan, have a control of your financial decisions, have a control of your financial plan, and the goals will always be achieved. Thank you so much. Kindly share, kindly like, and subscribe. Hit that button. Thank you so much. Enjoy.